Hello and welcome to Market Domination. I'm Josh Lipton, live from our New York headquarters, just weeks away from the holidays, and Amazon reportedly announces tens of thousands of layoffs. Plus, markets are rallying on news that the U.S. and China may be closer to a real trade deal. We are digging into those stories. But right now, there's just under an hour to go until the closing bell, and stocks are higher here. Take a look at the popular averages. The Dow is up 271 points. The S&P 500, your broad gauge, is rallying 1%. The tech-heavy NASDAQ is up 1.7%. Let's welcome in now data and markets editor Jared Blickery. Jared, what are you seeing in today's trading action?
It's hard to find an index that is not set for record highs or hasn't hit an intraday record high already today. That includes the Dow here, up 0.5%, as you said. And let's just briefly check out the intraday price action. It was up and away on the open, and it's basically been treading water all day long, but with some decent gains. NASDAQ composite chip stocks are flying. Tech is broadly higher. That's powering the NASDAQ higher by 1.7%. S&P 500, very similar looking chart, up 1%. Not the kind of chart that you want to short right now. And even the Russell 2000, up 1/3%. A lot of days it's leading or lagging to a serious degree. I guess it's lagging today, so we'll call it that. But still, I believe it is set for a record high, or at least it was earlier today. And we got to check in on the bond market. The 10-year T-note yield is exactly flat right now. So right where it was Friday at the close, 4%. 30-year down about 1 basis point to 4.57%. But here's the 13-week. This is interesting. Down 5 basis points. 13-week tracks what the Fed is doing. It focuses on the short end of the market, and so that is pricing in more rate cuts, 3.72%. And with that, let's move on to the sector action. We'll get into some heat maps. Tech, as I said, really dominating the action today, 1.74%. Then we have two more mega cap sectors, consumer discretionary and communication services. Each of those up about the same, 1.25%, but also industrials, financials, energy, healthcare, real estate, utilities, all those in the green. Materials and staples slightly in the red, but not by a lot. And let's take a look at the NASDAQ 100, where we see NVIDIA up 2.5%, Alphabet set for a record, up 3%, Tesla up 3%, Meta up over 1%, same for Amazon and Microsoft. Apple up 1.7%, also set for another record high. So it has just been a real story of some gangbuster price action. And who exactly is surging any particular day, that changes hats. But check out Qualcomm today, up over 11%. Was up quite a bit more than that. Best day in years for that chip stock, and not quite at record highs, but getting closer there. Also see a lot of outperformance here in the chips, but I want to move on to software because it's not quite as bullish, but still a pretty bullish picture. You'll see Oracle down 0.8%, Workday down 1.5%, Snowflake up 3%. And just finish up with disruption here because some of these smaller names are doing pretty well as well. Robinhood up 5%, probably close to a record high. CoinDesk up, or Coinbase up 3%, and a lot of other names. I'm going to leave you on the meme stocks because a lot of these guys are jumping too. So big, small, what have you, lots going up today.
All right, thank you, Jared. Appreciate it. Well, a major workforce reduction appears to be in the cards for Amazon with just weeks away from the holidays. Our tech editor, Dan Halley, joins us now for more on this breaking top story. Dan.
Yeah, Josh, this is a report from Reuters saying that Amazon's going to lay off 30,000 people from its corporate operations. Obviously, that doesn't include things like logistics or shipping, the folks at the warehouses that actually box up your goods. This is the folks who are in offices. And, we've reached out to Amazon, haven't heard back regarding a comment yet. But this kind of is part of an ongoing trend that we've seen in big tech, where they talk about this idea of flattening layers, where you hear a lot about reducing managerial roles and things of that nature so that companies can be, quote unquote, more nimble. There was an earlier report last week about how Amazon's AI wasn't up to snuff, and part of that was because it had built out so many different layers of organizational structure as a result of pandemic hiring. And so that was making them leading them to make decisions more slowly than they previously had. So this could be a part of that. Again, we haven't heard from Amazon yet regarding that, so it's still unclear exactly what the layoffs are going to impact. But again, this seems to be part of a broader trend in Silicon Valley.
Yeah, interesting we get that headline right ahead of earnings as well. Dan, thank you. Appreciate it. Well, President Trump is set to meet with Chinese President Xi Jinping, and optimism is fueling the markets on what officials are calling a substantial framework ahead of Thursday's summit. For more, we're bringing in now Yahoo Finance Washington correspondent Ben Worschel. Ben.
Yeah, Josh. So we've had a lot of positive signals from at least the Trump administration over the last 36 hours ahead of this Chinese meeting. There's even been the outlining of what I would describe as kind of 4 headline provisions of what could be in what the Trump administration is calling a deal here, that are all of which are notably market friendly. Number one, most important for markets, is the taking off of potential tariff increases. There is a 100% increase in tariffs that was scheduled to go into effect this weekend. That appears to be off the table, short of some major reversal on Thursday. Second is the expectation of some sort of delay on China's export controls on rare earth minerals. This, of course, was the action that China took earlier this month that started all these tensions. And the Treasury Secretary Scott Bessent says he expects there'll be some sort of delay there. Third is what are being called substantial Chinese purchases of American soybeans. No number attached there yet, but that would be a big important for U.S. farmers who are currently selling a total of 0 soybeans to China, which is one of the major purchases of it. And then last is the finalization of a deal to spin off TikTok. Treasury Secretary Bessent says that deal is done. Essentially, it just needs kind of final approval from the presidents Trump and Xi. And that's what the Trump administration is laying out explicitly. There's even other hints that there could be more compromise in the offing. The major thing missing at this point, as I've been alluding to, is Chinese confirmation of all this. We do have confirmation from China that there has been progress in talks over the weekend, but it's just in sort of much less glowing terms than you're hearing from the Trump side. China's state media's quote was, in a term that I think lost a little bit in translation, is there's a basic consensus on arrangements. So, and no details there. So historically, China doesn't confirm anything until it's a done deal. So for the moment, farmers, rare earth producers are kind of in suspense, and we're expecting here in Washington that'll continue through this meeting on Thursday before things are fully finalized one way or the other.
So that's China, Ben. There also appears to be some headlines, some movement with America's closest neighbors as well. Fill us in there.
Yeah, so we've got kind of a good news, bad news story there with Canada and Mexico and their tariffs on the U.S. On Canada first is the kind of bad news side of it if you're looking for trade de-escalation. Things are clearly not going well between Trump and Canada at the moment. This is over an ad that used excerpts of Ronald Reagan to slam Trump's tariff plans. Trump announced he announced over the weekend an additional 10% tariff on Canada that would be on top of the current 35% tariffs on Canada, although we don't have full details there on when or how they're going to go into effect. Trump added to reporters just a few hours ago that he's not planning to talk to Mark Carney for a while, which freezes a lot of existing trade talks that were going on issues like metals and steel and that way. The good news side of it is Mexico. There's another tariff deadline this week that could have seen tariffs increase on Mexico. That is now off the table, according to the Mexican president, Claudia Sheinbaum. She said she talked to Trump over the weekend, and they're giving a couple more weeks there to keep talks continuing there. It kind of keeps a trend we've seen this week where, with his rhetorical fire at least, Trump is very much more aimed at Canada than places like Mexico, which were much more focused his first term.
A lot of news keeping you busy. Thank you, Ben. Now let's turn to the Fed's big rate decision coming on Wednesday. Vishal Kanduja, Morgan Stanley Senior Fixed Income Portfolio Manager, joining us now. Vishal, good to see you. So let's start there with that Fed decision. Vishal, markets assume that cut is a lock this week. Is that your assumption, Vishal? And how many cuts do you pencil in from here?
Thanks, Josh, for having me on. I think the Fed, put simplistically, is in a very tough situation at this point. They don't have clarity on data, at least the data that we and them depend on, telling them about the data dependency or data dependent path that they're on. So I think the next 2 cuts in this, because I think the October information, whenever it comes out, when the government opens up, is going to be still delayed as well as looked at skeptically. It'll be very difficult to push back from the Fed's perspective, push back on market expectations of how much is priced in till the end of the year. So not only the one coming up this week, but also the next one feels, from our perspective, a locked-in rate cut from the Fed perspective from that end. Now, if you expand that to end of 2026, I think around 4.5, 5 cuts are priced in. The asymmetry of data and the pieces of information that we're getting today, I think the labor market slowly but steadily weakening or tightening, however you want to put it. Also, I think we've started to see very in quick succession, I think some bankruptcies that are showing up, smaller in nature, but idiosyncratic in nature from our perspective. But still, I think the financial conditions are starting to get a little bit tighter from that perspective as well. So we do think that they deliver on market expectations, about 5 cuts till the end of 2026.
So they cut, Vishal, even as inflation is above their target. Does that mean investors should think about, hey, well, I guess 3% is the new 2%?
I think for a brief time period, yes, probably for the next 3 to 6 months, I think you would see inflation hovering around that higher end of their comfort zone. I think the last CPI report, which was a clean data, again, backward looking, but very clean data that we got, clearly showed you glimpses of that. If the consumer, the top echelon of the US consumer, is able to take on the price increases from tariffs, which I think some of those categories in the CPI number showed that they were, companies are going to be very comfortable passing that down. So you would see that in the next 3 to 6 months, some of those then consumers pushing back and then the profit margins getting impacted. So we do think that the Fed is very clearly going to be very focused on the labor market downsides rather than the temporary, still higher and uncomfortable, but temporary and sticky inflation prints that we're going to see for the next 3 to 6 months.
Get you out of here on this, Vishal. For investors who are listening right now, let's bottom line this. What is the smart fixed income playbook, Vishal? What do I want to own? What do I want to avoid?
High quality assets are giving you 6 to 6.5%. If you have more risk budgets within your fixed income allocations, you can get comfortably to that 8 or high single digit yields. And why I use the yield numbers? I think yield is the best predictor of total return for the next 3 to 5 years for fixed income investors. So starting yields are very attractive. Own the high quality part, the more liquid part of the fixed income market today, and that comfortably gets you to that 6 to 8% yield targets that some of the fixed income investors are targeting. So that's what we would keep on. And then as we are getting into the late cycle, avoid some of the sectors within the economy, like the subprime consumers, like the very low quality commercial building that is getting a tough time refinancing. I think those will have a tough time in the next probably 12 months here in the US economy.
Vishal, appreciate your time and that advice. Thank you.
Thanks for having me on.
Coming up, when we return, we're taking an in-depth look at what to expect when Apple reports quarterly earnings later this week. Plus, we're talking trending tickers and why they're moving. Stick with us. All right, now time for some of today's trending tickers. Yahoo Finance's Alec Canal joining me here for a look at Microsoft, Robinhood, and Berkshire. We're going to start off with Microsoft. That stock getting an upgrade over at Guggenheim ahead of the tech giant's quarterly results this week. So Guggenheim upgrades this one, Ali, to buy. Analysts saying at a time when investors struggle to separate AI beneficiaries from AI casualties, it's clear to us that Microsoft, along with other hyperscalers, cloud giants, is a beneficiary. Bloomberg noting, by the way, Wall Street now almost universally bullish on this name.
Yeah,
by their
99%.
count, 99% of analysts say you should buy this stock. None recommend selling it.
Yeah, only one holdout, Hedgeye Risk Management, which stays neutral. But I mean, pretty astounding here, especially when you look at the optimism across the board when it comes to AI, when it comes to big tech. If you take a look at some year-to-date action, Microsoft is up 26% since the start of the year. You have Alphabet, Nvidia, each up 42%. Even Apple, which has been a laggard among the big tech Mag 7 players due to some question marks about its AI strategy, that is up 7% on the year thanks to its iPhone demand and that upgrade cycle surprising to the upside. Meta up 30%. I mean, these gains are truly astounding. However, that's also the market's biggest vulnerabilities, right? Because you have stocks at record highs, you have this rise from the top since the tariff lows that we saw in April. And when the rally is being held by just a handful of these mega cap names, as we head into earnings season, if there's any downside surprises when it comes to growth or commentary on the earnings call, that is going to hit equities, but something to watch as we continue to hear from a lot of these big players this week into the upcoming months to really see if we can maintain the momentum that we've seen and keep these record highs.
All right, we'll find out soon enough. All right, turn now to Robinhood. That stock gets a price target lift over at Compass Point. That firm's citing revenue growth from equity transactions. Our owner Inez Frey has a good write-up here. Analysts at Compass Point, they raised their price target on shares to 161. They cite revenue growth from equity transactions. They talk about prediction markets, crypto fees. Expect the company to disclose October trends pacing well above Q4 expectations.
Yeah, across the board here, trading activity remains strong. You mentioned equities, options, crypto, but the real story is that explosive growth within these prediction markets. Users can wager the outcomes of sports games, government shutdowns, Bitcoin prices, and Compass Point expects Robinhood to generate roughly $20 million in Q3 revenue from that business alone, and that is double from last quarter. The firm also saying that it could hit $50 million next quarter with the NFL season boosting engagement there as well. So overall, you take a look at this stock, we've just seen quite the run up in
it's
shares.
It's up 300% this year.
300% this year. That's crazy. And remember that Robinhood just joined the S&P 500 last month. So really sort of signaling that it's no longer a meme stock anymore. It's a serious player and it has a lot of growth levers as well.
Up about 300% this year, and still most on the street say it's a buy-in. All right, finally, last year, Berkshire Hathaway gets hit with a downgrade amid concerns over its earnings outlook. So KBW cuts the rating to underperform, so a sell. That is always going to make headlines when you're talking about Berkshire. Many things moving in the wrong direction, they say. Beyond our ongoing concerns surrounding macro uncertainty and Berkshire's historically unique succession risks, they think the shares will underperform as earnings, they say, challenges emerge and or persist.
Yeah, across multiple units when it comes to some of those earnings challenges, from Geico, where margins may have peaked, to Berkshire Hathaway Energy in Burlington Northern Santa Fe, which could feel tariff-related and tax credit pressures. You mentioned succession, and that is a big question mark across the board. How does Berkshire Hathaway operate and perform post-Warren Buffett? And this firm basically saying that we don't have enough information at this point to be confident in that. The price target, $700,000 a share. That implies about 5% downside from Friday's close.
That torch formally passes on January 1st. Big day on the calendar. Thank you, Allie. Appreciate it. Apple is reporting earnings on Thursday. Investors are zeroing in on what the company says about early iPhone 17 demand and its plans for AI integration across devices. For more, I want to bring in here Tom Forte, Managing Director and Senior Consumer Internet Analyst at Maxim Group. Tom, always great to see you. So we've had a number of recent positive headlines about Apple, Tom. You look at the market cap here, we are right back, knocking at $4 trillion. Bottom line, how strong is the iPhone cycle, Tom? What do you see? What are you telling clients?
Yeah, so the way that I think about shares right now of Apple, there's clearly a lot of good news built into the shares. So the company, when they gave their outlook for the September quarter, was anticipating strong demand for iPhone 17 to the extent that they were guiding to mid-single digit to high single digit revenue growth. So now the question is, when they report on Thursday, how did they do? Did they exceed expectations? What does the December quarter look like? So it isn't clear to me that the iPhone 17 is a part of a major upgrade cycle, that AI super cycle that never happened. But it does seem like there was some pent-up demand for at least a new iPhone, and it's at least performing within that up 5 to up high single digit expectations management had outlined.
Tom, some of your colleagues on the street, I know, other analysts who cover the name, I know what they're watching. They're watching lead times for these iPhones, and they're telling clients they remain extended, and that's why they're optimistic. What do you say to that argument?
Yeah, good point, Josh. So on the lead times, I'm wondering if the data isn't what it used to be, meaning that if you think about it from a supply chain standpoint as it relates to tariffs, Apple's essentially assembling iPhones in India instead of in China, and then assembling other products in Vietnam for sale to the US. And then for sale of rest of the world for iPhones and others, they're still relying on China. So I'm wondering if the data is therefore different, an apples to oranges comparison to work Apple in there. And I wonder if that's affecting the performance. Because I still think that Apple has a huge challenge in China from a competitive standpoint. They get about 10% of their sales there. And in addition to those AI challenges, I think they have pretty significant competitive pressure in China. So the lead time data may not be as bullish as some people think it is.
We're going to soon find out, Tom. Let me ask you this, kind of a bigger, broader question. Plenty of Apple skeptics, Tom, who said, listen, this company does not have a compelling AI story, AI strategy. It poses this kind of existential risk to Apple. But it feels like investors right now, Tom, they're willing to look through that. And I'm curious what you make of that.
I think the willing to look through part is that the iPhone is still 50% plus of revenue. So to the extent that iPhone 17 may be doing well, just because consumers were ready for an upgrade and not because there's a compelling AI reason to do so, the iPhone can move the needle on earnings, given it's still the most important product for Apple. So yes, there's existential risk, but then the question, Josh, is what's the hardware that's going to be the conduit for AI for consumers? Are we finally going to find something beyond the smartphone? I don't think we're there yet in any of the AR, VR stuff, including Vision Pro for Apple. But I think that's still a question mark as far as what's the hardware that's going to drive all the AI usage in the future. And it seems like the smartphone will still have a role, maybe less of a role than it has today.
What about, you talk a lot about the hardware, Tom. What about the services side of the business? What do growth and margins look like ahead?
The services side has been very good to the extent that that's what's really enabled the multiple expansion for Apple when you think of the relative profitability. So on the services side, to the extent that they continue to have growth in their installed base, not just iPhones, but across all their devices, their services revenue may continue to outperform the remaining revenue for the company X services. And given the more favorable margins, and also given that it's essentially exempt from tariffs, that also I think is potential good news for the stock.
Tom, I only have about 30 seconds left, but you cover Amazon as well. This report from Reuters, Amazon plan to cut as many as 30,000 corporate jobs. That would represent about 10% of the company's corporate employees. Your thoughts there, Tom?
Yeah, so my thoughts in a nutshell are that since Andy Jassy took over, he's definitely focused on margin. So I think that this may be the next step for Amazon. If you recall, Josh, they had the if you don't return to office, then you could essentially be laid off. This may be, an amplified version of that as a way to adjust their costs as part of Andy's overriding effort to improve and maintain margins at Amazon through good times and bad.
Tom, always great to see you. Thank you, sir.
Thank you, Josh.
We're wrapping up today's Market Domination. Don't go anywhere. We've got you covered with all the action following the closing bell. Stay tuned for Market Domination Overtime. That is the closing bell on Wall Street, and now it's Market Domination Overtime. Getting your full coverage of all the moves to get you up to speed on the action from today's trade. Yahoo Finance's Jared Blickery joins us now with the latest market action. Jared.
Thank you, Josh. A round of records here and applause. First with the Dow, that's up 0.7%. And we'll look at the intraday price action, closing very close to those record highs, the highs of the day rather. And in the NASDAQ, 1.86%. That's a pretty high amount. Haven't seen that in a little while for the tech-heavy index. And the S&P 500 up 1.25%. And you can see it was just a gap and go day. Really didn't have anything to worry about if you were holding intraday. day. And we'll take a look at the Russell 2000 too, off of the highs here, which happened earlier in the day, but nice little rally into the end, albeit a little bit slow. And taking a look at the sector action, it's been a story of tech all day and the mega caps. The three mega cap sectors, tech, consumer discretionary, and communication services, all three of those rounded out the top three. All three the only outperformers of the S&P 500 there. And the only loser today was materials. And you take a look inside the NASDAQ 100, you see what I mean here. Outsized performance from Tesla and Alphabet and Apple reaching record closing highs today. Looking into the semiconductor space, we talked about Qualcomm earlier, that's up 11%, Lam Research, Intel, ARM each up more than 3%, 5% for Marvell, 6% for Supermicro, and inside software, some decent gains as well. Snowflake up 3%, and looks like Path up about 3.5% as well. And as I pointed out just a few minutes ago, ARK Innovation Funds, so some of the smaller names like Hood, Coin, Shop doing well, even the meme stocks, a lot of the larger meme stocks, some of the smaller ones in the red, but some of the larger ones just broadly bullish today. And you take a look inside my leaders basket, these are all kinds of ETFs that I follow to get sentiment readings. Almost everything in the green. What was not in the green? Gambling, regional banks, and small oil. But right there at the top, Bitcoins. You can bet we're going to be talking about that in about 30 minutes, Josh, with the market takeaways. But number two, biotech. Haven't seen biotech in that top or near the top slot. Chip stocks, Korean stocks, which are heavily geared towards the chip trade. MAG7, the MAGS ETF hit a record high. KWEB is China, TAN is solar, and the list goes on. So another broadly bullish day for Wall Street. Josh.
Thank you, Jared. Appreciate it. Well, Wall Street is in an upbeat mood, touching records ahead of big tech earnings this week and the Fed's rate cut decision. Here with more on what to expect, let's get to Laffer Tangler Investments CEO and CIO Nancy Tangler. Nancy, it is great to see you. Maybe just quickly, Nancy, get your take on today's trade. I mean, as Jared was just saying there, gap and go day, green everywhere, record closes. Is this, Nancy, just investors saying, listen, economy looks resilient, earnings growth healthy, the Fed's cutting, keep it simple?
I mean, Josh, it's great to see you too, and I kind of think so. Yeah, I mean, we have a Fed that, I could argue doesn't need to cut this round, but they're probably going to. Add into that, quantitative tightening is going to come to an end, we believe, and then you've got GDP growth, which is, Atlanta Fed is coming in at 3.9%. The first quarter and the second quarter were distorted by trade, but this is a real number. And I think investors should pay attention. And then earnings have come in better than expected, which is impressive because the numbers had been raised pretty regularly since the summer. Revenues are coming in at, beating by about 82%. All of that is important. And then you add into the fact that productivity, pay now, realize the benefits later, doesn't get counted in GDP. So I think there's a lot to be optimistic about, except for valuations.
Well, Nancy, let's drill into an area you know very well, which is big tech. Those earnings are on deck. Broadly, Nancy, what are you expecting to hear, and how critical are those reports for the market?
Oh, I mean, they're everything, of course. I think Microsoft will deliver good, respectable, I guess I should say, earnings growth. Last quarter, CFO Amy Hood said, hey, we're not going to increase our CapEx out of line with the growth in revenues. I think that's a good number for investors to hold on to. We've owned it for almost 10 years now, and it just continues to delight. And then if you look at, and I think Azure is going to continue to drive growth. So, 35, 37, 38%. Amazon, I like the news today. I mean, already before layoffs, Amazon is the low cost producer, I guess you would say, $433,000 of revenue per employee versus Walmart, which is the next best at $324,000. So when you take into account the layoffs and then the fact that they're going to double revenues on the retail side without increasing any staff due to automation, that's the same kind of number that Walmart gave us. That's bullish for investors in terms of margins and earnings growth.
When these big tech companies report, Nancy, and they talk about those AI CapEx trends, do you think they're going to tell us, hey, yes, we're going to continue increasing there? And is that what investors want to hear and see?
I mean, I think they are going to continue. You know, we've heard that the MIT study quoted quite frequently that nobody's making money on AI, but we've been listening to the companies already, and I think, I don't know, we've had 140 plus report. And what we're hearing is things like Raytheon, one of the largest holdings in our ETF TGLR, they delivered a triple play, but they're also utilizing AI to improve manufacturing, and it has driven margins up. I call that making money. Procter & Gamble's utilizing AI. We're seeing it across sectors. It's not just in financials but pharmaceuticals. And then you've got quantum waiting in the wings. So as an investor, I want companies to continue to invest in the technologies. And I think that will continue to drive productivity growth, which is how we get ourselves to the next stage in this bull market.
Do you think, Nancy, investors can bank on just multiple AI winners in every vertical? Like there's going to be multiple AI search winners. There's going to be multiple AI enterprise winners. Or no, we're going to see some fall flat on their face and you're going to have to pick your spots.
Yeah, no, I think it's the latter, Josh. And I could make an argument, though it's in our 12 best ideas portfolio, that Apple has fallen flat on its face as it relates to AI. We were adding to the stock this late summer at about $204 a share. We moved it in our 12 best, and it was really as a defensive technology name. But in terms of all of the various, I guess, AI companies, I mean, you could make a list of them: Anthropic, OpenAI, xAI. We think there will be winners, and as investors, we're focused on Tesla/xAI because that's one we can hold and know and understand, and it's got multiple levers to pull. So we're watching. I mean, just remember Sony Betamax and VHS. Sony was the better technology, Betamax was, but VHS won the game, and most of the viewers aren't going to know what I'm talking about.
Yeah, I know what you're talking about, Nancy. At least two of us do. What did you make, Nancy, of that Qualcomm news today, by the way, since I have you? New AI accelerator chips. Did you look at that? You're invested in the chip space and have been for a while. Did you look at that and say, oh boy, that's a problem for NVIDIA? Or did you think, no, this market's big, it's growing, there's room for a few different players and winners?
Room for a lot of winners in that side of things. I thought the price move was a little out of line with the actual news, but that's the algorithms, that's the hedge funds. It'll settle in and maybe it keeps the 20%, or I don't know where it finally ended. But we're making our bets with NVIDIA, with AMD, and with Broadcom. We like the industry leaders. Qualcomm has been a difficult stock to own for a long time. I hope it generates outperformance for investors just like Intel, but we think there are better places to be.
Nancy, always great to see you. Thank you.
Thank you.
Turning now to Whirlpool as that company reports its third quarter results, and Brooke DePalma joining me here with the numbers. Brooke, what do they say?
Good afternoon. We did see the stock pop about 4% after these results beat Wall Street's expectations at both the top and bottom line. Diving into those numbers, we did have revenue come in around $4 billion. That beat Wall Street's expectations of $3.93 billion. And also on the bottom line, we got a nice beat there. The adjusted earnings coming in at $2.09 compared to what Wall Street had expected was going to be $1.40. Now, what exactly drove this increase in net sales? Well, we got a nice pop when it came to small domestic appliances. Think like those KitchenAid mixers. Those were up 10.5%. Also major domestic appliances here in North America. That segment grew about 2.8%. And I had a chance to catch up with the CFO, and he said specifically they had a significant amount of new product launches, especially in the KitchenAid and those major domestic appliance space. And they refreshed about 30% of their major domestic appliance portfolio here in the U.S. Now, once those products launched, they did see those sort of pick up. And once this housing market really does recover, they're also expecting some nice growth from there as well.
What did the company have to tell us about tariffs? Anything there?
Yeah, well, what's interesting is that this company does produce around 80% of its U.S. sales here in the U.S. And so they did see, though, margins hit by about 250 basis points during the third quarter. On that, he did say that the biggest thing that affects us, there are certain components that they bring in from outside the U.S. that they just can't find here, like certain electronic components. And they also got a bit of a hit because they had to take those US-made products and bring them over the border to Canada.
All right, stock pop at about 2% here. Thank you, Brooke. Appreciate it. Well, coming up, Qualcomm takes aim at NVIDIA when it comes to AI. We'll explain what's involved. Stick with us. Qualcomm is taking aim at NVIDIA and AMD, unveiling a new lineup of AI chips designed to power the next generation of data centers. Joining me now is Yahoo Finance tech editor Dan Halley. Dan.
Yeah, Josh, they announced the new A200 and A250 AI accelerator. These are what they call NPUs, or neural processing units. Basically, they're chips that are designed to run AI inferencing. Inferencing being when you actually deploy an AI app and then start running it rather than training, which is when you actually teach that model what it needs to know to actually run. So they're going to be deploying these with Humane, the Saudi Arabia-based company. They already have a deal set up there. And this is their re-entry into the data center space. It's their first real accelerator for rack scale offerings. That's what this is going to be, is either a chip or in one of those big racks. They already have a plug-in card that's an AI accelerator, but it's not at this kind of scale. And they previously tried to enter the market with Microsoft in 2017 for CPUs, but it just never really got off the ground because of competition from AMD, as well as obviously Intel. So this is a big step for Qualcomm, part of its efforts to kind of diversify away from its dependence on the smartphone space, where they make money off of selling chips to the likes of Samsung, as well as modem chips and licensed chip technology to other companies. They're trying to get away from that, as kind of the smartphone market has stagnated over time. They've been pushing into the PC market as well as automotive, and now getting into the data center for AI.
You know, Dan, if I'm an NVIDIA investor, I'm listening to this, Dan, how should I be feeling? Should I be concerned about this? They don't appear concerned, Dan. NVIDIA's popped about 3% in today's trade.
Yeah, I don't think that investors are going to be too concerned when it comes to NVIDIA. Don't forget, we already have a rival to NVIDIA in AMD, and investors haven't seemed to mind that competition much at all. Even as we saw, even today, AMD talk about how it's teaming with the government for $1 billion supercomputer projects. And so, I don't think another entry into the field is going to be a problem. Some folks see it potentially as a problem for Qualcomm, with the space already kind of being dominated by NVIDIA and then AMD, as well as the idea that companies are building their own chips, whether that's Microsoft or Google or Amazon or Meta, even having talked about working on its own chip in the past. That's a lot of competition for Qualcomm to try to muscle its way through. Now, not saying it can't. It's trying to do that in the PC space as well with its PC chips. Obviously, this is a much different area, and the spending is going to be a lot higher for any kind of customers that it can grab. But if I'm an NVIDIA investor, or I'm looking at it from NVIDIA's perspective, I don't really think that they're going to be much too worried. I think AMD is a bigger concern, and then their own customers building their chips, that would be a concern.
All right, Dan, thank you. Appreciate it. Well, IBM shares have been trading near records after news that it can use AMD chips to help problem solve quantum computing errors. My colleague Julie Hyman spoke with IBM's quantum systems director for more on this milestone.
It seems as though, most significantly, quantum computing, which can result in a lot of errors, is very productive, but there are errors as part of them. You've found a way to decrease the errors. Do I have that right? And can you explain to me how and why this is significant?
Yeah, so we came up with an aggressive path towards getting towards a fully fault-tolerant, error-corrected machine by 2029. That was part of our roadmap earlier in the year. Now, a key aspect of making that actually work is fundamentally figuring out where the errors are in a real-time fashion and correcting them. And there's actually a classical computing element of that needs to be done. It's called decoding. And so our news is actually about working out how to use a real-time algorithm in a short amount of time using standard, in this case, AMD Xilinx FPGA chips in order to do that kind of algorithm.
And why is it important that you can use an AMD chip that's already out there to do this kind of work?
Yeah, so this type of decoding work has always been looked at as something that could be very computationally expensive and difficult. And some have suggested that you might need to use large GPU clusters. And we certainly know about the energy and cost implications of using things such as GPUs. And so really this gives us a different way of looking at it, that in fact, with the right type of algorithm, we can do this in a very short amount of time and on much cheaper types of hardware. It's just the beginning, of course. There's still going to be a lot of work to fully flesh out this type of algorithm towards what we need for 2029. But it shows that we can really start to work together with partners such as AMD to develop this kind of future.
And so in 2029, as you mentioned, is the date that you're focusing on. What will happen in 2029? What milestone are you guys trying to achieve? And then what do you do with it?
Yeah, I mean, it's really exciting right now. There's so much going on in quantum computing. There are systems already today that we're putting out that are at the 100 qubit scale that are pushing on problems that you can't, in fact, solve classically. Now, the question there is whether or not those are actually applicable for things in the enterprise. In 2029, with Starling, our goal is actually put out a machine which is fault tolerant and error corrected at the scale of 200 logical qubits, which can actually run out to what are called quantum circuit sizes out to hundreds of millions of gates. And that has a significant impact on potentially being used for a lot of the provable advantages that we actually have probably read about or heard about for quantum computing to be applied to in chemistry, in finance, in optimization, and so forth.
Jerry, we've seen this really interesting phenomenon in the market where quantum it's still early stage, it's still a few years out for most applications. People are really excited about it, and they're excited about the investing case, the innovation case, and what this could do. As somebody who's actively working on this stuff, what do you find sort of most exciting about the potential here?
Yes, I mean, it's quite a wild ride. I'll certainly say that. There's been a lot of news. Almost every week you're hearing about news in terms of quantum computing. But to me, what is really so amazing about working in this industry is really the pace and the momentum that we're driving from a roadmap perspective. There's a lot of work that's going on throughout sort of reinventing how computing is done. And we have a multi-year roadmap that shows how it integrates with your computers of today, CPUs and GPUs, and this real future of computing footprint that we need to define that's going to be so rewarding when it all comes together.
Jerry, there are some of the small competitors to IBM that are sort of more pure play quantum computing companies that are sort of putting some of these systems in place today. And it's my understanding, and to be clear, my understanding is pretty rudimentary, that there are sort of different approaches. There are sort of annealing approaches, gate quantum approaches. Is that the difference between what you guys are working on and some of the systems that are in place today? Can you sort of decode that, to use your word, that aspect?
So there's the quantum computers that we build, you can think of them as they're running what are called quantum circuits. Some might call that gate model kind of quantum computing. But the point there is that these circuits are what we have actual provable potential advantages for. And what we know that today, even at the machines that we're deploying, and we have 15 machines that are deployed, quantum computers over 100 qubits around the world today, that they can actually run workloads and algorithms that you cannot classically simulate. And so really that's this differentiating piece, right, in terms of what we're trying to be able to leverage this. And there's a lot of effort already going on in, we'll call it the scientific computing space, much like early days of GPUs, where people are really pushing the boundaries of what you can use these machines for. And then, as we continue to leverage it and interface it with these other computers like CPUs and GPUs, it's really exciting to see the kind of advantage pushes that we're going to see over the next few years.
Jerry, as you know, everyone right now is very focused on AI, generative AI, and the sort of advances that could bring, even though we're still figuring out what those use cases will be. How would you compare that to quantum and what quantum could do for the use cases in which it's going to be implemented versus what we're seeing from generative AI?
Yeah, it's a really good question and something that we often hear about, right? Because we expect all this exciting stuff to happen with generative AI, and it's solving all these different types of problems that we care about, from optimization, chemistry, and so forth. But really also the way to think about quantum computing is it's a fundamentally different way of computing, right? So it actually has algorithmic advantages over anything that you can do using traditional computers, be it CPUs or GPUs. That being said, though, it's really, really exciting to see how they actually thread together. And there's already work that's being done in terms of using first AI for quantum in ways to accelerate how we develop the quantum computing protocols, develop the algorithms, how we map problems onto quantum hardware. But then there's also the other side, which is how quantum is going to accelerate some of the problems that AI is also looking at, from optimization, from machine learning, and from characterization, classification, where there are actually provable algorithms that we know that quantum has the ability to really accelerate and push to the next level.
Time now for to watch Tuesday, October 28th. Going to start off on the earnings front. Earnings season in full effect with some more big names reporting tomorrow, including United Health Group, Royal Caribbean, and Visa. Royal Caribbean announcing results for the third quarter. Analysts expecting the cruise line's new ship, Star of the Seas, and higher ticket prices on older ships to boost revenue in Q3. And Yahoo Finance will be talking to the Royal Caribbean CFO shortly after the earnings report on Tuesday at 11:30 a.m. Eastern. Taking a look at the economy, too. We're going to get fresh data on the consumer. It's coming out on Tuesday with consumer confidence. Economists forecast that number to drop in October compared to last month to 93.4, signaling that people are feeling slightly less optimistic about the economy. And moving over to the Federal Reserve, the Fed is kicking off its two-day FOMC meeting on Tuesday. Wall Street largely expecting the Fed to cut interest rates after the meeting, but investors will be listening closely for any clues about the Fed's path forward going into the end of the year. That's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow for all of your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market moving stories. Stay tuned.